which market we believe that you should be considering for 2024. This is going to be Austin, Atlanta, and Orlando, right? That's where all the cool kids are going. So that's where we need to go, right? Right?
Nothing of the sort. Nothing.
No.
No, not at all. Not at all.
What is going on, DeRosa Insiders? This is Matt Faircloth. Welcome to the Cash Flow Digest Show. As I said, my name is Matt Faircloth, and I work at a company that's phenomenal. You might have heard of called the DeRosa Group. I am one of the founders of this company, and I'm super proud of the company we've created and the community we've created here at DeRosa Insiders that all stands for the mantra of transforming lives through real estate, making the world a better place through real estate investing. That's what we do here at the DeRosa Group. Guys, we got a phenomenal program coming up because here's the thing. Real estate investing is a great vehicle to be in, but you can have the best property that's got the best fundamentals and the best business plan, but if it's in the wrong market, you will never change a market. You can only hope to participate in that market, right? So what that means is that great property could be on the corner of Nasty and Ugly Street in an awful market that's not ever going to rise. You can't make money on your own with a rental property. You need some help from the market. Maybe even makes your life a little bit easier. Maybe you could do it, but it's going to be a long slug, and it would go a lot faster if you had a market that was rising, that had good fundamentals, that could deliver good tenants, that have good working jobs, that are able to pay their rents in the property. And today's episode is about which market we believe that you should be considering for 2024. My man Hervé has picked multiple markets that he has researched. He is my dude, and he's a recovering Wall Street executive that has taken his Wall Street know-how to analyzing markets all across the U.S. I cannot wait to talk to him about that. So to do that, I'm going to bring in my man, Hervé, the brother from another mother, Hervé Francois. How are you?
Appreciate you, Matt. Thanks very much. Happy New Year to you. Happy New Year to everyone attending and all of our guests in South Stand. Hope everyone had a great holiday. We're back at it. Thank you very much. Thank you very much.
You as well. You've done some homework for folks on markets that you see to be risers. So, I mean, I'll just, predict. We're talking, this is going to be Austin, Atlanta, and Orlando, right? No. Those are top markets everybody's talking about. That's where everybody thinks that's where all the cool kids are going. So that's where we need to go, right?
Yeah.
No. Right?
Nothing of the sort. Nothing.
No.
No, not at all. Not at all.
Yeah.
It'd be interesting markets to invest, but we're not ranking them high whatsoever. They've got their own issues going on.
Why is it, as a rising investor, someone looking to make a scene, looking to get themselves involved in real estate or expand their existing portfolio, why would they not go to the Raleighs and the Charlottes and the Atlantas and the Phoenix, Arizonas? And that's where all the cool kids are going, man. Those are the big markets. Yeah. Why wouldn't we go invest in markets that the media says are rising?
Matt, it's a good question. And the main reason why it's just too dang on challenging, right? It is just way too challenging. It's way too competitive. You've seen returns start to compress in those markets over the past year or so. You're now beginning to see a lot of supply coming into those markets. And because of that, that's putting a depression on rent growth in those markets, right? So now all of a sudden, how are you going ahead and forecasting your rent growth as you are underwriting your deal? You're talking about your friend that's, seeing 2 months of free rent in Texas or maybe Austin in order to get tenants into their properties, right? I hope you went ahead and projected your P&L that way. So it's very competitive. Returns are getting squeezed. A lot of supply is coming onto the market, and there's such great opportunities in so many other areas across the country that we can recommend, that we can point you towards for investing.
What goes up must come down.
Absolutely.
And you can't have 22% year over year rent growth in Arizona and in Phoenix, Arizona, and have that market hold up forever, right? People's incomes didn't go up 22%, right? So at some point, that's going to have to correct. And so I think markets that you see spiking, where all the cool kids are going, Austin and Phoenix and stuff like that. I've heard of occupancy dropping in cities like Austin and Phoenix because of the amount of push that's happened in those markets. Now, eventually those markets will continue to stay hot. As you said, Tesla's expanding and those kinds of things. So long term, I don't think Austin is going to turn into like a wasteland or lower Detroit is not. Right. Eventually, those units they're building are going to get absorbed, and Austin's going to be just fine. Don't get me wrong, but there are better options out there that you're not going to have to weather a storm of competition for a little bit. And that's what Hervé's going to talk to us about. I want you guys to start guessing what markets, if you want to guess which markets Hervé's going to predict, that are more tertiary, secondary markets, not the top tier markets, but markets that are poised for a rise. You've heard of these markets, but they're not the ones that the cool kids are going to, because we don't want you guys to follow the cool kids. We want you guys to go where people aren't going just yet and where the tide's going to rise soon.
Yeah, listen, Matt, as a lot of folks may know, may not know, we really prefer investing in what we call the secondary markets, right? So these are the markets that fly below the radar screen, that they are not the major metro markets like Matt was talking about, Atlanta and Charlotte and Phoenix, Tampa and so on and so forth, Dallas is of the world, because there's so much great opportunities in these secondary cities, particularly your secondary markets, particularly those that could even be benefiting. Maybe they are 30, 40, 45 minutes away from a major metro, so they're benefiting from the different industries that drive the economy in that major metro, but they are not getting hit with all this oversupply and so much competition from real estate investors coming in from all over the country. They're little nuggets, if you will, right? Again, behind the scenes cities that there's a lot of attraction. There's a lot of opportunity. They have some good job growth. You got companies moving into these cities. They might be bracketed by a good university and the university's healthcare system. And then, of course, surrounded by things like hospitality, manufacturing, retail, state government-related jobs, city-related jobs, and so on and so forth. So, drum roll, we're going to kick off because Fayetteville, Arkansas. Okay, so we're talking Fayetteville, Arkansas, a population of 98,000. They've had about 1.5% population growth since 2020. They have just under 3% job growth right now and an unemployment rate of only 2%. Now, here's a town now, Fayetteville, Arkansas. Think about it. It's in Northwest Arkansas. It is the headquarters specifically, and it's that town called Bentonville. That's the headquarters of Walmart. Fayetteville is home to University of Arkansas, which is about 30 minutes south of Bentonville. But nevertheless, Walmart has its effects, its clenches on Northwest Arkansas. So you got median home price of about $380,000, but you got median rent of about $920. That gives you a price to rent ratio in Fayetteville of 35. As real estate investors, any ratio over 21 makes it very attractive for real estate investors, because that tells us it's more attractive for folks to rent in that market than to purchase a single family home. You got average occupancy in Fayetteville, Arkansas at 97%. You got a cap rate at 6.5%. 60% of the homeowners are renters, and the other 40% actually own a home. And there's no one industry that represents over 20% of the economy in Fayetteville. The highest is healthcare, which is 15% of the jobs. Retail, 13%, education is actually 17%, and so on and so forth. So again, you got University of Arkansas right there in Fayetteville. You have Walmart 45 minutes north. It's also the headquarters of J.B. Hunt. You've got other big employers over there like Washington Regional Medical Center, Twin Rivers Group, which is a restaurant chain Slim Chickens is a big restaurant chain, and Twin Rivers is a poultry processing company. So Fayetteville, Arkansas, folks, we know Matt, our very good friend Henry Washington, lives in outside of Bentonville, Arkansas. Yeah, really, really good friend, really good man, and an example of a person who migrated from LA to Northwest Arkansas, but predominantly because of the jobs. Walmart was the main reason why he moved over there. So Fayetteville is one. And folks, trust me when I tell you this is not an exhaustive list. It's just that this is a 1 hour show. So Matt, now there's only a certain number.
Fayetteville, Arkansas, guys, a market that nobody's really talking about, or like mainstream. I have heard it mentioned many, many times for those reasons, but it's not something that's getting shot from the mountaintop as a market that should be considered for real estate investing. So consider Fayetteville, Arkansas as a target market for you guys to research more. Hervé, city number 2. What do you got?
To Knoxville, Tennessee. We're going Tennessee, baby. Another nice secondary market, population just under 200,000, right? We love population sizes like that. So population just under 200,000. Population growth since 2020 is 4.5%. Job growth just under 3.5%. Unemployment rate at 3.3%. Now, the median home price for single family in Knoxville, Tennessee, $265,000. Median rent is $1,200 or $1,200. So the price to rent ratio in Knoxville is just at 19, right? So slightly below 21, but still very attractive for real estate investors. The occupancy rate, 95%. We were looking at an investment opportunity, Matt, in a town right north of Dallas, Texas, not too long ago. The average occupancy in that market is 85%. Average occupancy in Knoxville, Tennessee, 96%. All right. Feeling good about that with a average cap rate of 6.5%. In that market of Knoxville, Tennessee. I'm liking this already, right? Renters make up 53% of the market. So again, no one industry driving the economy in Knoxville. The number one is healthcare. We love healthcare. We're pretty much recession resistant. That's about 14% of the jobs. Retail's 13%. Education's 11%. You got headquarters of Regal Cinemas down there in Knoxville. Pilot Flying. So, the Pilot truck stops on the side of the highways. Yep. That company's headquartered in Knoxville. Team Health, a big healthcare center. And then the First Utility District of Knox County, which is actually a big technology hub. When we talk about the innovation quarters of Winston-Salem, North Carolina, there's something similar called First Utility District of Knox County in Knoxville, Tennessee. So another one where, how many people have you heard investing in Knoxville, Tennessee, folks? Right now, you've heard of Nashville. And what Matt and I were joking the other day, Nashville, whoo, right? That ship has sailed, baby. That ship has sailed. Right? I mean, the Amazon and all of its minions moved down there, and it's just blown up, right?
You know, and I've heard this too, Hervé. Did you know that the license to in Nashville, you have to get a license from the city to rent a crane, right? For crane rentals to build big buildings that employ people, or that big housing projects. Not that we're doing those kinds of things, but those things create a lot of jobs, a lot of spillover in the local market, right? The Nashville only allows a certain amount of cranes to be over the city at a certain time to kind of to keep sprawl not happening so much, or there's not cranes all over the place, right?
Right.
The waiting list to get that license is 3 years long. Hervé. Did you know that? In Nashville. So Nashville is going to keep cranes over that city for a very long time, and that data is out. The people already know those things, right? So why would you go and get into a market that's going to stay hot like that, and you're going to have that much compression, that much competition, probably that much building going on for a very long time? That's going to be a market that's going to be pushing rents, and competitively, you're going to be scratching and clawing to make income in that market for a very long time, scratching and clawing to get deals. Why not go to a market like Knoxville, where it's going to be a lot easier, and you might get some of the economic spillover from Nashville as well?
Absolutely. Yeah. No, that's a great point.
Yeah. So
last but not least,
wait, guy, if anybody one last shot for those of you guys watching to guess right now as to what the last third market Hervé's got. Okay, I've got real estate. Oh, okay, Northwest. There you go. Eric's given a recommendation, a real estate broker. So if you guys got any other guesses for last market that Hervé's going to throw out here, I got Cleveland, Ohio, Hervé. That's interesting. That's a good one. Didn't expect that one. That's a good one, guys.
It's a good one. And listen, just because you didn't,
Cleveland Browns might win the Super Bowl this year, Hervé.
No,
you know,
over my Ravens. So first of all, I got
to watch the Ravens. They might. You never know. Right?
Come on now.
Dark horse. Okay, Hervé, third city. What do you got?
Third city, man. I'm so happy I found this one. I was shocked that I found Fargo, North Dakota.
Fargo, North Dakota. Okay, I saw that movie one time.
I don't know how that movie ends. Now check this one out.
Yeah.
Dakota. I mean, I was really surprised when I saw some of these metrics, and I'm going to tell you the metric that shocked me.
Fargo, North Dakota. Hervé, take us through it.
Okay, population 130,000. Population growth since 2020, 3%. Job growth 1%. Unemployment rate 2%. Okay, median home price in Fargo, North Dakota, which pretty much borders the state of Minnesota, where one of our partners lives. Hey, so median home price in Fargo, North Dakota, $300,000. Median rent, $910, right? So the price to rent ratio is 27 times, right? So well above that 21 that we're looking for, that identifies a very attractive place for real estate investors. Occupancy rate for multifamily in Fargo, 94%. Now here's the home run. Cap rate in Fargo, North Dakota. It was 6.6% in Fayetteville, 6.5% in Knoxville, Tennessee, where we invest, man, in Winston-Salem, North Carolina. It's currently about 5.5%. In Fargo, North Dakota, 8.7% cap rate.
Wow. Guys, the cost of money in Winston-Salem, North Carolina is the same cost of money in Fargo, North Dakota. So if I can borrow from a local bank or from Fannie Mae, Freddie Mac, whatever, that money's all tied to the 5-year and 10-year treasury and all tied to SOFR and all those other kinds of things. So it's going to cost me 6.5%, 7% to borrow money in Winston-Salem, and it's going to cost me 5.5%, 6% to borrow money in Fargo. So if you buy a deal in Fargo that's at that cap rate, you are a phenomenal cash flow day one. Right?
Absolutely.
Damn. Keep going, Hervé.
That's it. Absolutely. No one industry is over 20% that drives the economy in Fargo.
Okay.
Number one at 20% right there. Retail 11%, education 9%, accommodation, hospitality 8%, manufacturers 9% also. You got some big companies over there, Meridian Mutual Insurance Company, TMI Hospitality, a company called Shields. Think of them as a sporting goods and entertainment chain store, kind of like a Dick's Sporting Goods over here on the East Coast. The city of Fargo, you got a huge Amazon fulfillment center. They went ahead and they now when you start talking about shops and activities that are moving into Fargo, they opened one up last year called Kingpins. Think of like a Top Golf where you can come in and do golf. And this one also has bowling alleys and places to eat and bars and so on and so forth. So big community feel. They're putting it in these downtown areas, in these sprawling areas around Fargo, North Dakota, because they see more folks coming in, more jobs that are coming into the town. So listen, you're going to read a lot of lists over the next couple of weeks in regards to top place to invest in 2024. And you are going to see the Dallases and Atlantas.
Oh, sure.
You will see them, right? And you know what? good luck. It's all someone. But at the same time, I think what Matt and what we're trying to show you with this list here, right? And Eric, you went ahead and named some other cities, and guessing Mobile, Alabama, Tallahassee, and so on and so forth. They could be. I have not done deep dive investigation into those cities. If those are cities that you're attracted to, I definitely recommend it. But you're thinking correctly in regards to secondary cities, town cities. Matt likes us to go into cities that do not have a Major League Baseball team. None of these three cities do. They all have secondary.
Sure they do. But they all got minor league baseball though.
Yeah, man. In the league baseball team in Fargo, North Dakota is called Fargo Moorheads. And in Knoxville, it's Tennessee Smokies. And in Fayetteville, it's the Northwest Arkansas Naturals. So they got their minor league baseball. And what we're trying to stress here is that there's incredible opportunity that you don't need to throw yourself into the flames of a market that is a major metro, that's a very, very competitive, that's facing high occupancy because there's so much supply coming on, because 20% rent growth is unsustainable, like Matt was saying. So again, this is the beginning of the list. There are others. I'm sure if we start digging into, mid-sized markets in the state of Vermont, there might be some attractive areas in Vermont to invest, right?
Yeah.
So these are all, and by the way, I did take a look. All of these are landlord-friendly markets. And Fargo is not in the South. Fargo it's North Dakota, not South Dakota.
As north as you get.
It's about north you get. It's cold up there. It's cold up there. But hey, go. People need a place to live.
Go visit your properties in the summertime in Fargo.
That's right. So that's the thought process. I hope you found this very helpful. But it gives you a peek into how we think about selecting markets to invest in.
Yeah, very informative, very informative. Guys, you'll never hear us at DeRosa talking about the top tier markets, or just you might not hear other people online talking about places like Fargo, North Dakota, or Knoxville, Tennessee, or Fayetteville, Arkansas. Maybe Fayetteville, Arkansas because of the whole Walmart thing, right? But at the end of the day, it's about selecting markets that people aren't talking about but show good data. We are not let's go on social media and find out where we should invest. Data is where you want to look, right? Absolutely. If you want to know where all the cool kids are going, look on social media, and you can go and join the other million or so investors trying to get going in Austin, Texas, right? Go ahead and do that. Or you could be the one investor bidding on like a 30-unit apartment building in Fargo, North Dakota, and get a great deal that's performing at, as Hervé said, a high single-digit cap rate day one. That's where you guys want to be, okay? Because we want to see you guys make money and do this wacky thing called make money when you invest in real estate, not just do where the cool kids are going and get in line to lose the property a couple of years from now when the market makes a correction, okay? So it's all about cash flow, right? And that's what you're going to see in these markets that Hervé talked about. Hervé, thank you. Always enjoy doing the Cash Flow Digest with you today. Looking forward to having you back on soon, man. Thank you for joining us.
Guys, have a great one. Happy New Year again.
Guys, great conversation today. The new year is a great time to start talking about new investment strategies, and the markets that you choose to invest in is the fundamental beginning conversation that you want to have. And if you're already invested in a market, what tactics do you want to bring in? What other things do you want to bring into your investment strategy? If you guys want to have us help you expand your investments in the markets you're already in, or pick the market that you want to go in, because it doesn't have to be those three. Could be other markets out there. You guys want to join our accelerator program. What are you waiting for, right? If you want to hear more about our accelerator program, just write in the comments section, I want to hear more, right? That's where DeRosa works with you directly, and we will evaluate your business. Not everybody qualifies for the accelerator program, okay? But write in the comments section, or go if you're watching the recording and write in here, I want to hear more. And one of our team members will reach out to you and make sure that you qualify, because not everybody qualifies for the accelerator. It is something you got to be very serious about. You got to be willing to make an investment, and also of money and time into your business. And we will help you 10x your company, as we've done, and pick markets like the ones we talked about today, whether that's a market that you're already invested in, or take you guys to the next level. So write, I want to hear more in the comment section, and we will get back to you and help you guys get to the next level here. Great Cash Flow Digest today, guys. Great way to kick off the year. Looking forward to many more Cash Flow Digests, including one with my buddy Whitney Sewell that's going to be joining us in a couple of weeks, and some other great guests we've got lined up as well. See you guys then. Happy Friday. Happy weekend, everybody. Take care. Hey guys, Matt Faircloth here. Thank you for listening again to the Cash Flow Digest. I really appreciate you guys doing that. If you guys want to hear more about what DeRosa Group has to offer, go to DeRosaGroup, DeRosa Group.com, DeRosaGroup.com online. You can hear about all the great things that we offer from an educational standpoint and passive investment standpoint on our website. See you there. And if you guys want to join our online community, DeRosa Insiders on Facebook, where you can watch this program get recorded every Friday at noon Eastern, and you can come on as even a guest or ask questions on the show. We hope to see you guys on our online community, DeRosa Insiders. See you there.